So, do you remember what Zillow said at the beginning of 2022 about their home price appreciation predictions? They said we would see about a 20% appreciation through 2023. Then they downgraded it, and then they downgraded it again, and then again, and then again. Let's take a look at this article put out by Zillow in July of 2022. Zillow's home value forecast predicts a sharp slowdown in annual home growth from the current pace of 19.8% to 7.8% growth through June of 2023. Expectations for the year ahead have been revised down from Zillow's previous forecast of 9.7% growth in the year ending May 2023. The new forecast predicts a steeper drop in appreciation before stabilizing at levels closer to pre-pandemic averages. They go on to say, the downward revision comes amid a faster than expected deceleration of monthly growth in the Zillow Home Value Index and a weaker outlook for home transactions. The housing market is quickly rebalancing from what had been arguably the strongest seller's market in decades, with inventory rising and competition for homes easing in the face of significant affordability challenges. The rebalancing is expected to continue given the current macroeconomic headwinds. Now, I want to go back just a second and talk about something that they referenced in that article, and that was the Zillow Home Value Index. So why do I point this out to you? Because Zillow's Zestimates are at the core of their Zillow Home Value Index. This is what they use to generate those estimates. And those estimates are what they used in their iBuying platform, which lost them hundreds of millions of dollars, which ultimately they shut down because it failed. And now they want you to believe what they're saying about home price appreciation through 2023, even though they have changed their predictions this year alone 4 times. Now I want to show you another article written in August of 2022. The title of this is Zillow Economist. Here's the home price shift coming for your local housing market in 2023. So first of all, anybody trying to predict anything into 2023, that's just crazy. Our market is moving way too fast. But what did they say? They said, not only does Zillow disagree with the home price correction narrative, the Seattle-based home listing site thinks the pandemic housing boom still has some gas left in the tank. Between July 2022 and June 2023, Zillow predicts the U.S. home prices will rise another 7.8%. That's well above the 4.6% national average prediction posted since 1987. Again, I just want to point out this is how regionally house prices are expected to shift over the coming years according to Zillow. So this is just according to Zillow. And if you can see right here, this is your little key. The red means that you're gonna lose some pricing, and the blue means you're gonna gain pricing. Guys, there's no red on this map whatsoever. It is all blue. Flagstaff, 9.5. Lake Havasu, 12.1. That's crazy. Prescott Valley, 9.1. Phoenix area, 10.6. Tucson, 11.3. That is a lot of price appreciation still with the market that we have and what we're seeing. Now, I'm just going to stop right here and say this because I do not want to have any misconceptions. I am not by any means saying that our prices are going to crash and that our market is going to crash. However, we are already seeing it in the Phoenix market. We are experiencing a shift in our market. We have already seen some price appreciation loss in the last 3 months. So again, not a crash. We are seeing a correction. So all the blue on the map, I just don't see it. Now, with regards to when we will see prices change, we've talked about this on my channel. There are 3 things. So let's look at them really quickly again. So number 1 are the number of price changes per week. And as you can see right here from this chart, we have been spiking and spiking and spiking. So we are seeing a lot of price decreases. Now, this is list price decreases. This isn't necessarily that the home price and the home value is coming down. It's just price reductions. And so oftentimes what this means is that people were still testing the market to see if they could get that high price, and they could not. So now they're having to reduce their price. What's interesting is so here is July 24th price cuts. We had 4,172. Now here's July 31st. We only had a little over 4,000. So what this is telling me is that people are starting to realize this isn't just a blip on the market. We really have to be strategic in our pricing. Okay, so what's the next one that we have to look at? We've got to look at the increase in days on market. And as you can see right here, we were at 7,777, 8 then we started climbing, and we are now, right now, July 31st, we were at 23 days on market. So it has been steadily climbing. So that's number 2 that we look for before we start really seeing some price decreases. Okay, and the third thing that we need to see are seller paid closing costs. And again, we were down, and then all of a sudden we started to kind of climb up. This is the last thing that we've started to see, and it's just been in the last few weeks, maybe the last month, that we've started to see the increase in seller contributions or seller concessions for the buyer. So these charts that I'm showing you are specific to the Phoenix area. And there's 2 more charts I want to just show you just to further demonstrate that we are seeing a shift in our pricing. It is not drastic. So I don't want anybody to be afraid, but we are seeing that shift. So this is the monthly median sales price. So this is year over year. And you can see that we hit our peak in May of 2022 at 480,000. And then we've come down. This is August. We're at 449. Okay, and then the other one I want to show you is this contract ratio by zip code. This is the map. This is the overall Valley of the Sun, the Phoenix area, and all the surrounding. And we had at one point, I think 3 or 4 levels, 8 levels of insanity actually was, I think, the highest that we ever got. Right now, you can see that we are pretty much green throughout, which means that we're warm. The contract ratio, we need to be between 30 and 60, which means that we're still kind of in that balance market. In some of these zip codes, we're in, that's very low. We do still have a few zip codes, 85254, that's a little bit higher. But a majority of these zip codes, some of these are even cool. And so what is this saying to all the sellers and all the buyers? It means that the sellers have now got to negotiate on their prices. And buyers, you have the ability to negotiate on the sales prices and the other terms in the contract. And like I said before, sellers have to be very strategic about their pricing. Okay, now back to that Fortune article where they also looked at Moody's Analytics data, and they do not have the same outlook as Zillow. So take a look at this map, and this is how regional home prices are expected to shift through the end of 2024, according to Moody's Analytics. And they expected the shift between Q4 of 2022 and Q4 of 2024. Now, again, I'm going to say this. Trying to predict this market right now into 2023, let alone 2024, is just crazy. It's just too far out, and our market is changing too fast. I mean, take a look at what happened when the pandemic hit. Everything shut down, and everyone was sure we were headed for a crash. And the market turned so fast and shot up so quickly, everybody's head spun. So let's just take a look at this map for a second. Now you see some blue on this, but you also see some red, which would indicate some declining price points. And again, you see these in some of the areas that had some of the highest price increases overall in the last 2 years, like Boise, Idaho, Reno, Nevada. You come in here, Lake Havasu. It's funny to me that Lake Havasu is the darkest of the red in all of Arizona, Flagstaff, Prescott, Phoenix area. So I'm going to stop right here because I've checked this map multiple times. I've been watching this data as well. I have seen this as high as 10%. So just to be fair to Zillow, they have also changed their data outlook. So instead of seeing a 10%, I'm now seeing a 4.5%. And what does this say to me? It means that this market is changing so fast, they just can't keep up. And people wanted to think that in the beginning that we were definitely headed towards something bigger than it really is. And they're starting to change their tune. So why do I think Zillow has such a rosy outlook on our market? Well, it could be that they just teamed up with Opendoor to help buyers and sellers with their real estate transactions. Let's just keep in mind what happened with these 2 companies before you start putting too much confidence in their reporting or their business acumen. So Zillow got in the home buying business using their Zestimates and lost hundreds of millions of dollars, ultimately got out of that business because, well, that business failed. Opendoor was just fined $62 million. Why? Because they were cheating and lying to the consumer out of thousands of dollars per transaction. Now they want you to trust them together with your largest asset. Both of these companies have tried and tried, yet they have continually failed the consumer. Why? Because as much as people want to simplify the real estate transaction, it is a complex transaction. And it is very stressful. I can't tell you the number of times that I become a therapist over a realtor just to help get the deal done. It takes patience and compassion as well as knowledge and skill to put all the pieces together and get it across the finish line sometimes. A computer or entry-level employee trained to answer questions on the phone just cannot do what is needed to get some of these deals done. You need experienced people to get these things done. So although it's really fun to go to Zillow and search and look at homes, you just can't trust any of their data. I mean, if they can't make money and they're a for-profit business, how are they going to make you money? So if you'd like to learn more about what just happened to Opendoor, take a look at this video right here. If you've got any questions, please feel free to reach out. As always, I thank you for watching, and I'll see you next time.